Hey everyone, welcome in to another daily editorial here on the KE Report. We're focusing on the precious metals sector as I am chatting with Jordan Roy-Byrne, founder and editor of the Daily Gold. Now, Jordan, let's start it off with a quick technical update when it comes to the precious metals. Gold, first and foremost, ever since, let's say, early to mid-April, gold has been in, I think you can say, more of a consolidation phase, moving sideways. It's bounced between, let's say, a range of around 1670 up to about 1750, 1760 level. So actually a fairly tight range. This is giving time for some of these moving averages to play catch up. And when you consider that it was just about, under 2 years ago, the gold was sub 1200, it's still been a very nice move for gold. What's your technical outlook for gold as it's in this consolidation?
Well, Corey, I mean, the key level support-wise is right there around 1675. I mean, the 200-day moving average is right about 1590 or so, maybe a tiny bit higher. But basically, we have one level of support, which is around 1600 or a little bit below. And then the main level right now, which is 1675. And the longer we can hold 1675, the more this is a very bullish consolidation. So that's basically the situation for gold. If it can hold 1675 one more time, that would be really, really encouraging. That would tell me that that this tight consolidation is going to remain tight, and that eventually gold is going to break to the upside. So, and I mean, I'm not quite sure, but gun to my head, I think it's probably going to hold 1675, but that's just a guess right now. But I mean, if gold holds that another time, it's going to remain very, very bullish, the outlook.
All right, let's talk about the gold stocks then, because the gold stocks, they're a bit more in a correction. GDX over the last about 4 to 5 weeks has moved down from that about 3750 level, down about to the bottom, about 17-18%. Still, though, holding, I think, that important round number-wise 30 level when it comes to something like GDX. So, yes, it's in a short-term correction, argument being very healthy short-term correction, at least for right now. What's your outlook for the gold stocks?
Yeah, I think as far as this correction, to sum it up, most of the damage has already been done, but that the correction will continue. It could continue in the form of a consolidation. If not, it's possible that GDX could test. I mean, it's basically twice this month it's rebounded from the low to mid 31s. I don't want to rule out a test of 30. I mean, there's a confluence of support in the low 30s. So that's something to keep in mind. But I mean, it's also possible that low in the low 31s could hold. I mean, if it gets tested again, maybe it could make another rebound, because twice it's rebounded pretty well from the low to mid 31s. But I'm not. I'm really not that concerned, Corey. You know, whether it tests 31 again, or even if it has to go down to 30. I mean, I think most of the damage for this correction has already been done as far as the price. But that being said, I mean, the time component, it's possible that we could continue to consolidate for, at least a couple more weeks. So that's basically how I see it. I think most of the damage has already been done, but I still think as far as time, the correction needs more time before the market is going to be in position to begin an impulsive advance.
All right, how about silver then? Silver made that run towards $19, has turned around, but hasn't broken down. Silver's been a lot more volatile over the last few weeks to even months. What's your outlook for silver? Is it similar to, let's say, the gold stocks then?
Yeah, I would say actually it's similar to GDXJ, because both are pulling back from very significant resistance. Silver, just look at a weekly line chart, and you can see how 1850 is very significant resistance. I mean, that other than the move that we had in I believe September 2019, and then the peak in 2016, those are the only times silver has gone above 1850, 1875 recently. But even if you're just looking at years before that, you can see the significance of weekly resistance there in the mid 18s. And on the daily chart, I mean, we can see that silver has tested, just below 19 four different times since last September. And I like the fact that silver was able during the rebound, it was able to rally all the way back, from the mid 11s all the way up to nearly 19. I like how silver, despite crashing, was able to recapture that very relatively quickly in a couple months of time. So, like GDXJ, silver basically rallied up to multi-year resistance. It tested it. Now it's correcting. So both those markets are in a very healthy correction, and looking at it, it's probably going to continue for a couple more months, I would say. And silver and GDXJ, it's just biding its time. It's consolidating, it's digesting the move and preparing for eventually, a move that looks like it's probably going to take out resistance. So with silver, I'm not that concerned if it corrects, 3, 4 more months here, and even if it goes down and tests the 400-day moving average in the low 16s, that's not going to change the very bullish setup that we have, which is the potential for the market in the next move to finally break that resistance in the 18s and run to at least 21 and potentially go higher after that.
Okay, Jordan, just a quick comment. If we take a step back and look at what's happening around the world, there's a lot of people, a lot of gold bugs that are always looking for the next major driver for the precious metals. A lot of people right now are pointing to the Fed and other central banks with all this money printing. I get it, and I think that is a major factor to consider, but quite frankly, this is the narrative out of central banks for the last couple of months and out of some central banks for the last couple of decades. What do you think in terms of near-term drivers, let's say 2, 3, 4 months out, that could be the catalyst to pop these metals higher and move them above some of the recent highs?
It's a really good question. It's something I haven't thought that much about. The first thing I would say is, the market is a discounting mechanism. So it's not going to be, it may not be that obvious to us over the next couple months what is really going to be the driver. I mean, you basically have negative real rates or a decline in real interest rates. It's something that, along those lines. I don't know if it's going to be rising inflation expectations or if it's going to be on the order of more economic weakness. And obviously the Fed, I mean, I don't know if they want to go to negative rates. It's a whole nother conversation. But if we get, more concerns in the economy that there's going to be a double dip, some money could come out of stocks. And some of that money could find its way into gold and eventually gold stocks, and that could be how we get the breakout. So that's something to keep in mind. And that kind of, if the economy, who knows if we're even going to have that much recovery. I mean, I'm talking about a double dip, but that's a couple quarters into the future. But right now, there's this thinking that probably the worst is over for the economy and it's rebounding and, the recession could be over. I mean, that's possible, but it's also possible that it's not, and that the virus and the second wave becomes more of a problem because a lot of these places in the U.S. didn't implement the kind of restrictions that they needed to implement to, quash the virus. And so if that pops up again, perhaps that could impact the economy somehow. And in addition to that, just the realization that we're not going to have a big recovery yet, those things could cause the government to do a couple more spending packages, send people money in the mail again. So, that type of policy, that potentially could be a driver of the breakout. But I'm just thinking off the top of my head because I haven't thought that much about it. I mean, I think the big picture technicals for the sector are healthy, but I mean, it's an important question. It's something to definitely think about. But if I had to answer one way to another, I would probably guess that it could be, on the order of economic weakness and the government deciding to have to, put forth more spending and more, helicopter money to people in the mail, basically.
All right, Jordan, let's move over to some of the companies because you cover companies in your newsletter along with the technicals for the gold and metal sectors. When it comes to either explorers or prospect generators, both of these companies do move or have the best potential to move on the back of drilling and good drill results. When it comes to isolating some of the better projects here, obviously the companies that are running, that are continuing to build out a discovery, well, they're doing well and have been doing well even during the boring sideways market. But what are you focusing on? Even outside of what everyone says, management, what are you focusing on?
I'm focusing on the quality of the project and the potential for, let's say, a small discovery or a small deposit, the potential for that to get a lot bigger, the potential for the company to add value to that somehow. Um, we're just talking about explorers, but even in like producers, for example, like the best performing junior producers have been the ones that have had organic exploration contribute to future production growth. So for producers, it's all about production growth, and organic exploration can really help that. And so it's not just for the explorers and those types of companies. It can also make a difference for producers. But with respect to explorers and exploration, yeah, to me, it really comes back to the potential for the project to become a mine. Is this asset, is this deposit something that has potential to become a mine? Is this something that has potential to be able to grow significantly? And I err more on the side of the project and its growth potential than management. I think, we hear a lot of experts, people who are smarter than me, talk about people, people, people. But you don't want to be, I don't want to invest in great people who kind of have a marginal asset. I try and focus more on the asset. See if you could find a great asset that has growth potential, and see if you could find a good management team that knows how to get value out of that and bring it forward. I just wouldn't overemphasize the management, because a lot of people who do that, then they wind up in they wind up in companies with assets and projects that are really not that great, and then they're relying on management to somehow move that forward and sell it to somebody else who's a bit of a greater fool in a way. So for me, it's all about exploration and adding more value to an existing discovery or making a new discovery. And what I like to see with exploration is I like there to be some kind of value there already, some kind of backstop. I don't like to get into basically drill plays where they're just starting out, and it's very difficult to value those types of companies. So they're really a gamble. And I think a lot of prospect generators fall into the same patch where it's impossible to value them. They do important work, but it's impossible to value them.
Yeah, it's very true. And you know what? Prospect generators are even tougher because they need a good market for new companies so that they can come in and start drilling some of these projects. But what about producing companies? No doubt that the environment for producers right now much better than it was just a couple years ago. But there's this balance between obviously being a major and having the cash and also carrying debt, but having the cash to just continue to work through projects and weather any issues. But there's a lot of these single asset producers or even two asset producers that operate on a slightly smaller scale. They're generating more money right now, but a lot of the investors are looking for the next growth avenue, which can be tough for some of these companies. What do you focus on when you're looking at some of these smaller producing companies?
Well, if you're looking at a small producing company, again, for producers, it's all about production growth. So for a very small company, do they have production growth potential? And you have to look at the potential numbers and figure out, if they're just going from no mine to one mine, you have to look at the numbers and estimate and calculate, well, at the current price and they go into production, what could this be worth? What is the potential valuation? So you have to compare that with what the company's valued at now. For really small things, not just really small things, but like what I said in the last answer, organic exploration is so key, and there's not that many junior producers out there that have done really well because of organic exploration. Just think of like a handful of the best producers over the last couple of years. I mean, Kirkland Lake is an obvious example, but there's many other ones. I don't want to mention all of them because I actually own them, and I'm not someone who owns like 20 or 50 stocks, so that's why I don't publicly talk about individual companies. It's just organic exploration. That is a huge driver for these producers. I mean, it can drive production growth. And, even in some cases, you don't need exploration success to drive production growth. But unless you're looking at a really tiny company that can kind of nickel and dime its way to production growth, you really want to find companies that have that production growth potential.
Fair. All right, Jordan. Well, we're going to wrap it up there. Good chatting with you. As always, I do appreciate you sharing at least a little bit of the stocks that you're looking at. But, yeah, you don't follow the wide range that some of these newsletter writers do. But I think that gives you more ability to dive into these stocks and really pay attention to some of the higher quality companies out there. So, Jordan, good chatting with you. Thanks for taking some time today. I will chat with you next week. If anybody wants Jordan and I to look at any technicals or any metals in particular, please either comment or even better, email me at fleck@kereport.com. Jordan, thanks for your time today. Have a great rest of your week.